Asset management outfit Eastspring Investments Berhad says that while Malaysia's equity market is likely to remain choppy in the short term, some sectors may offer downside protection with potential positive returns. The construction and technology sectors, for instance, are likely to benefit from an upturn this year. The strengthening US dollar is also supportive of export businesses that trades in the greenback, such as glove manufacturers. Eastprings Chief Investment Officer Chen Fan Fai says Malaysia's economic growth will slow down to 5% this year, with petroleum and palm oil prices facing downward pressure. The weak consumer sentiment is also contributed by the shrinking purchasing power, implementation of GST in April, and tight loan condition. Moreover, Chen says macroeconomic headwinds will result in a slowdown in corporate earnings growth to about 7%, compared to the consensus estimates of 10 to 12%. Speaking at Eastspring's Market Outlook briefing for 2015, Chen notes that as long as the fear of a twin deficit lingers, the ringgit will remain weak.
One of the reasons the ringgit is actually weakening is because people look at our current account and also our budget, that it is currently so-called under threat of having a twin deficit, and that may lead to a downgrade.
Eastspring's global strategist Robert Roundtree says export volumes should be closely watched for signs of recovery of the currency.
If you were wanting to know where the bottom would be as a foreign investor looking at Malaysia, I would be looking very, very closely at the volume of exports. Because the moment the volume of exports starts to pick up, whatever the level the ringgit is, I'm saying, it's starting to work. And that would be the point that I would say it may not get better, but at that point it will stop getting worse at a slower rate.
Meanwhile, Chen says the government's target of bringing down the fiscal deficit to 3% of GDP is achievable, as development plans will be cut back due to lower oil revenue. He is also of the opinion that Bank Negara will not raise its benchmark overnight policy rate or OPR for now. On the ringgit, Chen says the consensus estimate is that it will trade between 3 ringgit 40 cent and 3 ringgit 70 cent against the US dollar this year. The downside risk includes a drastic slowdown in the Eurozone and China and potential geopolitical tension that causes a massive currency flight. Jacqueline Peng, DHTV.